Welcome back, investors, to Ticker Time News. I'm Adam, and the stock market found some upside momentum today after logging some pretty big losses last week. There was some speculative buying along with some bargain hunters on the way in today's market, and this was the reason why. There was a sense that the market had gotten oversold in the short term. We had been talking to it leading up to the day before the rally began. Now, here we are in the second day of, this is a pretty big move, 1.5% on the S&P 500, 1.5% on the Qs, the IWM, 1.7%. Small caps are doing pretty darn good. Mid caps, though, were the big winners of the day, up nearly 2%. MDY is the ticker for the mid cap stocks. Now, this was all good and well received, and earnings. We're at the end of earnings season. Pretty much it's over with. We only have a few more days left before the end of the year. However, Nike, which is a Dow component, had pretty good earnings. They were up 12.2% today. And we talked about FedEx yesterday. They also had pretty decent earnings, mainly because of the cost cuts that are in effect over at FedEx. And they were up 3.4% today, which is pretty much what they were up yesterday in the after hours. But today's trade, it triggered some renewed hope that maybe the stock market could see a Santa Claus rally after all, leading into the end of the year. Like I said yesterday during the live stream, I think we could float up over the next few days as more and more people are leaving the offices, taking their vacations. Next week is going to be a slow week when it comes to volume because there's not going to be a lot of traders hanging around. They've made their money for the year or lost it, whatever they did. And next week, it's going to be small. There's hardly going to be anything to talk about. No economic data coming out of any major instance. And there we have it. Tomorrow, Friday, it's the really last of the big trading days that we have for this year. Next week is a short holiday week, so we won't have much volume because of that either. But going back to the Dow was up 1.6% today. Nike led that rebound. Nike was completely in charge of that rebound, up over 12%. Now, that brought the Dow over the SPY and the NASDAQ, or the QQQ and the SPY. Now, thanks, of course, to some strong demand and contention that the worst of Nike's inventory problems are behind it. But FedEx, like I said yesterday, it was because of the cost cuts. There's $1 billion in cost cuts they found since September that they can implement into their business plan for 2023. So those two things helped this market rally today. Now, let's keep moving on. Investors, nonetheless, they are still cautious about buying into this market because of what's still ahead of us. But they're trying to put that into 2023, allowing the rest of 2022 to kind of be merry, right? Be happy. Okay, now the economic data that came out today, it was kind of mixed. But there was one report that completely overshadowed Nike's good earnings or FedEx cost cuts, and that was weaker than expected existing home sales report for November. That was released at the same time as the this morning's earnings with Nike. Now, the broad-based rally effort today saw the S&P 500, which breached 3,800 yesterday, push past its 50-day moving average, and that was very important. Today, that moving average was sitting at 38.77. That also lines up with the anchored VWAP that we have set on the low of the year, the low of 2022, on the 13th of October. That anchored VWAP is the lower black line. Let me show you with the highlighter right here. And that converged right with the 50-day moving average that came up right here. So today, the S&P 500 SPX closed above those two very important lines. The anchored VWAP for the low of 2022 and the 50-day moving average. Those two should act as support for the S&P 500 moving forward for the rest of this year, okay? And I really do think we could mount up. I think we can mount up very quickly, very easily, getting ourselves back to 3,900, then above 3,900, and work our way to that 4,000 level by the close of business for 2022. Yeah, 4,000 by the close. I still have that marker on the screen there at 4020. And that 4020 is almost, if we look at the Fibonacci retracement that I put on here, it's the blue lines going from the middle of the screen all the way to the right. Going from the top on December 13th to the bottom, which we made yesterday. If we look at where those lines line up, okay, the big one is at 4036. All right, that's the 78.6% retracement. That's what I'm kind of shooting for, the 4020 area again. That 4020 I think is where we could be by the end of the year, and that's a significant move higher as we work our way there. As a matter of fact, let me do this. If we go from today's close and we go to the end of the year, okay, which is Friday, December 30th, and we go to 420, where are you? Right there. That's a 3.7% move, okay? We went 1.5% today. We need 2 days of 1.5% between now and next Friday, and we're at 420. So see, it's not that far away. I mean, not 420. What am I thinking? 4020, which is about 400 on the SPY. I think we could easily get there by the end of the year. One more week, and I know next week is short because of the holiday season. I know volume will be low, but look, 2 days just like today, and we're there. We're there. All right, so that target, that goal for us at the end of the year, 4020, 400 on the SPY, is not out of the window just yet. We could get there, especially since we crossed a big hurdle today, being the anchored VWAP and the 50-day moving average, and closing above them. Even though it's just 1 point above them, still closing above them. Now, the main indices, they kind of clung to a fairly narrow trading range around that key technical level of the 50-day moving average today. Ultimately, the S&P 500 managed to close, like I just said, 1 point above that 50-day moving average. Now, we haven't looked at sectors in a while. Let me pull up the sector chart here to show you something. They were all green today. All of them, all 11 S&P 500 sectors registered gains today. Consumer staples, XLP was up 0.8%, and materials also up 0.8%. That's XLB, and they showed very slim gains, but they did close in the green. And then we have energy, XLE, up 1.9%. That's at the top of the leaderboard. It was the biggest mover, and it has been for a few sessions now. So energy has just been taking over, which has helped push the SPY, the SPX, the S&P 500 up higher. Now, the heavily weighted information technology, XLK, was up 1.7%, and consumer discretionary, which was really beaten down and oversold, was up 1.6%. They were also among the top performers. Now, mega cap stocks were a pocket of strength today, except one big one. That being Tesla, TSLA. Let's go look at that. I believe Tesla hit the bottom today. That's my thought. Look at this. Just hear me out and look at this. If we bring this chart a little tighter, this is the daily view, okay? What chart pattern do we see here? What do we see here? And let me get the highlighter to point it out. We moved down, and now price is starting to, look at this, wedge. Price is starting to wedge. We are in a falling wedge on Tesla. What has that done in the past? What does that mean? What is a falling wedge? Let me pull up the chart, and I'll tell you that the SPY, the Qs, the IWM were all in a falling wedge leading to their rally that began yesterday. We called it out on Monday. We're very firm on that those three were about to turn around. They were in a falling wedge structure. And let me clean this chart up right here. A falling wedge. Where do we see that? Right here. Right here. What are the characteristics of a falling wedge? You have price move down, expansion, and then price starts to tighten up and wedge. You set your stop loss at the bottom of the wedge and you run it. It's a reversal pattern, a falling wedge is. That's what we're seeing here in Tesla. We had the big move down. We're starting to coil up in this falling wedge. And then what happens? We're going to break out. Okay. I think Tesla may have hit that bottom today. And why do I say today? Well, if we zoom in here a little bit on this daily chart, give me a quick second to move this chart up. Today's candle is a neutral candle. It's a spinning top. When we go over here, let me show you the candlestick patterns. Over here, right here, a spinning top. That's where you have the body of the candle and you have about equal wick on top and bottom. That's showing price action is unsure where to go, right? So a spinning top is neutral, all right? It is neutral. It's showing that price action, investors aren't sure where to take it. Plus, let me point this out. The weekly expected move for Tesla on the bottom end is 138.8. We are about 75 cents below the weekly expected move. Tomorrow is Friday. What typically happens when we get outside of the weekly expected move? By the end of business on Friday, 68% of the time, we end up back inside the weekly expected move. So those are a couple things that are telling me, hey, wait, Tesla may have found a bottom here, okay? Now, why was Tesla down again today? All these days in a row now, Tesla has been falling. Why today did it continue? Well, it was only down a tenth, maybe 0.2%. Not a whole lot from yesterday's close. As a matter of fact, if we only look at the dollar amounts, it closed yesterday at 137. It closed today at 137. Although it was about 20, 30 cents below where it did close yesterday. But my point being, it was basically flat. That's another good sign. So all these put together, to me, are good signs that Tesla could be ready to move in the up direction. Now, headlines have been driving the move in Tesla. So, what drove it today? Two things. Number one, CEO Elon Musk said, and this is a quote, "I will resign as CEO of Twitter as soon as I find someone foolish enough to take the job. After that, I will just run the software and servers teams." Yeah, real quote from Elon Musk. Someone foolish enough to be the CEO of Twitter. And the second bit of news was specifically about Tesla. A report came out indicating that Tesla is aiming to implement a hiring freeze and announce layoffs. And this was according to a report in the media company Electric. So Tesla is doing what all other companies are doing. They were preparing for next year with a hiring freeze, well, a potential hiring freeze and layoffs. It doesn't necessarily mean that demand is slowing. It's in the cycle of the economy. Next year is going to be a tough year on the economy. That's one reason why the Fed went from a 75 basis point to a 50 basis point rate hike, slowing the pace of rate hikes this month. It's why Japan, surprisingly this week, announced that it's going to fight inflation. So, I think Tesla is finding a bottom here. I think this is a good sign, and I think Tesla could turn around. I do. And especially as we get here to the last week of the year, where the big bosses are leaving the offices of these big trading companies, and it's just going to be a few retail traders like you and I and some other lower level, not the head honcho at these trading firms. Maybe they want to see Tesla go up. Maybe they want to make a little bit of money in the last week of the year. Okay, let's keep moving on. Now, let's look at the economic data that came out today. Now, I'm going to go to XHB, which is the Home Builder Index. The reason I'm going to the Home Builder Index is because of the data that came out today. Look at this. The data was a bit negative, but home builders went up 1.8% on this ETF. Why? Why? The data was existing home sales. Existing home sales. That didn't have to do with home builders. Home builders reports were yesterday. This has more to do with realtors with the existing homes. Typically, these home builders, they're not buying back homes that they built to resell. That's what the realtor is doing in the secondary market. Now, existing home sales decreased 7.7% month over month in November to a seasonally adjusted annual rate of 4.09 million. The expectation was 4.2 million. Last month, for October, it was 4.43 million. You see the decline there. That is the 10th month in a row that existing home sales have fallen. Total sales in November were down 35.4% from a year ago. The takeaway here is that the median price growth has slowed as higher mortgage rates and affordability pressures are crimping interest from prospective buyers. People are no longer in the mood for buying a home, not with a potential recession coming their way. They want to get their financial house in order and their financial house healthy. Adding additional expenditures at this point in the game is not the best move. And many Americans know this. So, what's this going to do to the housing market? Well, it should cause prices to come down some, okay? When you have less buyers out there, right? You have more sellers out there. You're switching how we've been for the past, nearly 2 years, because there was a short little period in 2020 when there were way more sellers than buyers. But buyers have been just eating up everything that they can get over the past 2 years. But that is slowing down. That should bring home prices down some. How much is unknown. It really is. You have some people saying, oh, home prices are going to come down 10%, 20%, 30%. Well, nobody knows for sure. And what I can say is that this time is different from 2008. Why? Because homeowners have liquidity. in their homes. Homeowners didn't have liquidity in their homes in 2008. They were underwater. I mentioned this yesterday. And for home prices to get to that point, they would have to fall 40 to 45% for homeowners to be underwater on their mortgage. And then a flood of homes come on, a flooding of the housing market then begins. But I don't think it's going to go down nearly that much. I'm not even sure now if it's going to be a 10% drop. It just seems like whatever news is slung out there, home prices are holding steady for the most part. There are some specific regions where home prices have dropped. Look at the northwest, for example. I believe it's, is it Seattle that has come down nearly 10% already? Okay, let's keep moving on. We just need one tiny bit of good news on Tesla, and this thing has a huge short squeeze. I believe that is true too. I believe that is absolutely 100% correct. I'm sorry I didn't see that when we were talking about Tesla. But going back to Tesla for just a moment, there are a lot of people betting against Tesla at this current moment. And as we know, that has taken the price action down lower. But this kind of hold up and this falling wedge right here, to me, as long as this isn't the support line on the falling wedge, which right now, if we look at tomorrow, I mean, the support line is all the way down to 133, okay? I don't think that is going to occur. What happened to my box here? Why did it move? Did I just accidentally do that? Hold on, because it was 150 down to 130. Why did it move? I must have accidentally moved it. It sure did. I moved the box up. All right, so let's go 150. Oops. 150 and 130. All right, now we got the box back. Okay, I do believe 130 is the lowest, but if 130 is broke, watch out for 100. But I think we're going to bounce here. I don't want to rehash what I just talked about, but I do think Tesla is getting to the point where a bounce is imminent. I mean, this thing is oversold. Look at the RSI down here. I mean, it's just been going straight down as price action has been. It's at a 20.27. 30 and below is oversold. So this is way oversold. If you want to get a call option on Tesla, now is the time to do it. I believe. Not financial advice, but I mean, look at this thing. I mean, goodness gracious. And if we look here at this price momentum oscillator down here, I mean, look. Right now, this is down to, oh, where's that blue line? Negative 8.88. Yeah, this thing is way down there. So we need to see this definitely turn around. But with the RSI at 20.27, man, this thing is oversold at this point. And look at how momentum has been increasing. This lets you know that people have been in on this. And your comment about a short squeeze is right on. It is right on. So one bit of good news, you're absolutely right. Absolutely correct. Okay. The other bit of economic data that we got today was actually pretty good. It was the Conference Board's Consumer Confidence Index, and it took a surprising turn for the better in December, jumping to 108.3. The expectation was 101. 101, jumping to 108.3. That's just incredible. So what happened here? Why was consumer confidence up so much? Well, I guess the takeaway here is that there were upticks in both the present situation and expectations indexes. Now, it seems like they were driven by improved views on the economy and jobs. The economy and jobs? Consumers are thinking that the economy and jobs are improving? I can understand why the consumers think that jobs are improving, but jobs have been holding strong all this year. But we know that the economy is not that strong. And I don't think the economy is getting stronger. I think the economy is getting weaker. So it's interesting that those were the two areas that we saw improved thoughts from the consumer. Also, declining gas prices contributed to the lowest level for year ahead inflation expectations since September of 2021. So let's look. U.S. oil. Let's see. September of 2021, where was oil? Well, I mean, look right now. Look what oil is doing right now. Oil right now is on a rally. Look at this. Let me line it up right there. Oil is rallying right now. Okay. So September of 2021, where were gas prices? September 2021. Hold on. I'm getting there. Almost there. Okay. Okay. We're there. Let me just bring this up. Okay. September of 2021. All right. The last day of September was right here. And the beginning of September was right here. So, price for September traveled this line. Okay, so we have a top right there and the bottom right there in oil prices. So where does that put us? At the beginning of September of 2021, oil prices were at $67 a barrel. And at the end of the month, they were up to $75 a barrel. Well, where's oil now? $78 a barrel. So consumers don't get to see what we see here. What consumers see is gas prices, which have from November down to here, okay, that would be December the 9th, consumers have seen falling prices at the pump. But what do we see here over the past couple of weeks? We see that the price of oil is rising. Have the consumers seen that? Do the consumers know about that? No, they don't. We do, because we can easily track this stuff. But the average consumer out there doesn't know that. So I find that fascinating, okay? I find that very fascinating. Now, tomorrow, not talking about Tesla anymore. I should have taken that down. Okay, now, tomorrow, market participants will receive the following economic data. Thursday, 8:30 a.m. This will be either nothing or something. We get the Q3 GDP. We get our third estimate. The expectation is 2.9. The prior reading was 2.9. Okay, showing growth for the third quarter. We know that, and we've known that since the first estimate came out. We also get the GDP deflator third estimate. The expectation is 4.3%. The prior was 4.3%. We know that. We've known it since the first estimate came out for GDP. So the expectation is that nothing will change from the second estimate to the third estimate. As long as that is what happens, it means absolutely nothing for the market. Nothing. Except that the market can continue to rally because nothing is off course. Q3 still grew. Also at 8:30, we get the weekly initial jobless claims. Expectation is 225,000. The prior reading was 211,000, and also continuing claims. As long as those come in within expectations, tomorrow should be a green day for the market. Tomorrow should be a green day for the market. So let me go back here. I'm going to go to the SPY and then the Qs, the IWM. And if you have any questions, go ahead and plug them in now. I didn't have much to talk about for today. I'm trying to make it kind of short and sweet, to be completely honest. Now, when we look here on the SPY did not crack, or I should say close at the same level as the SPX, okay? Let me get these couple of lines here moved off. They were from yesterday, and they proved to be accurate. The falling wedge, that came true. Okay, today for the SPY closed right on the black line right here, which is the anchored VWAP for the low of 2022, which was on October 13th. Also, the 50-day moving average is just slightly above that anchored VWAP. As a matter of fact, it is sitting at 387, 1 point above where the SPY closed. Now, the wick of the candle for today did break that 50-day moving average. However, it did not hold, and it did fall back underneath that to close. So this is important for the SPY. The SPX broke this 50-day moving average. The SPY should too. If we look at the 5-minute chart here for the SPY, you can see that the majority of the action, and this is why I said this morning, at the beginning of the live stream, that after this morning's gap up, right here, and then rally, the market was basically in a very tight trading range where it just moved sideways for the rest of the day. That 50-day moving average at 387 needs to get knocked out. The SPY needs to push through that. And I think it can. I think it can. That won't be a problem. Now, you can see that when the SPY got to 387, it was rejected there today. That's where this top highlighter is. Let me move it right here. That is where, right about, let's see, what was that? 2:10 Eastern is when it got rejected at that mark. So we need to see the SPY break above it tomorrow at the open, okay? And there's honestly no reason why the SPY can't do that. Okay. Oh, your question. So typically that week after Christmas, does it float up like I've been talking about? Let's go back real quick. I want to show you something. And this is another reason why I'm bullish on the market, okay? let's see. Hold on one quick second. I need to pull this up. I want to show you. Oh, what's the quickest way to do this? I think the quickest way to do this might be just going over to let me see. Okay. All right. Oh, here it is. Perfect. 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 All right. I'm going to bring this over to the screen here. Share it with you. All right. Let me pull this chart up right here. Okay. This is a chart that shows market performance. This is the 3 days before Christmas. All right. So today was that day 3. Tomorrow, Thursday, is the day 2. And then Friday is the day 1. All right. What I want to do is, sugar, I can't draw on this. So let me just do this. Just hang on right quick. This way I can draw on it. Okay. So where did you just go? All right, let me open it up. Because when I can draw on it, that's a little bit better, so that way you can see it. Here we go. All right. I want you to focus on the bottom part, okay? I'll use blue to show you. So what we have here is we have the average, the median, and the percent up right here at the bottom. Those 3 lines. And what we're tracking here is this is 3 days before, 2 days, and then 1 day. Okay. So we got Wednesday, Thursday, and then Friday. Let me put an F. This is Friday. This group is Thursday. And this group is Wednesday, today. And it's tracking from 1988, all right, 1988, all the way to 2021. Those are the dates that it's tracking. And then what it's tracking is the moves that were made in the Dow, the S&P 500, the NASDAQ, and the Russell 2000. At the bottom, we get all of those date ranges averaged together, and then we get a number, okay? So, for example, 3 days before Christmas today, the Dow averages a 0.14 move, okay, which is up 64.7% of the time. 3 days before Christmas, the S&P 500 is up 61.8% of the time. The NASDAQ is up 58.8% of the time. And the Russell is up 70.6% of the time. Russell 2000. Those are pretty good odds. But those odds get better. Tomorrow's Thursday. The Dow, 73.5% that will be up. Okay? 73.5% for the S&P 500 that we will be up. Not that we'll be up 73%. It's 73.5% of the time the S&P 500 is up 2 days before. NASDAQ, 73.5%. It is up 2 days before. The Russell 2000 is up 76.5% of the time 2 days before. So this is showing that small caps, Russell 2000, outperform leading up to Christmas. Now for Friday, one day, okay, the Dow 61.8% of the time it is up. The S&P 58.8%, it's up. The Nasdaq 67.6%, it is up. And then the Russell 2000 70.6% of the time it is green. Okay, so this shows us that Wednesday, Thursday, and Friday of this week are typically green. What do you think? I mean, that's the data. That's what the data is telling us. Okay? That's what the data is telling us. That we will be green 70+% of the time tomorrow, Thursday. And on Friday, 60-some% of the time, we are green. Those are good averages, I think. That's better than a 50-50. So that's interesting. So that's why, that's why I am bullish on the market over the next couple days. Okay. And then we get into next week, right? Next week, it's a shortened traded week with that lower volume. And you can see that right here even. Let me pull this chart up out of the weeds here a bit. So you can see these the volume down here. If you look at volume, here's the median volume or the average volume, okay? And the past 2 days have been, today and yesterday, have been below average already on volume, all right? Monday was even below average on volume. Last week, the last big trading week, look at how high volume is above the median. So if we look here for the SPY, average volume is 83 million, okay? 83 million trades taking place is average. Today, it was 78 million trades that took place. So just slightly, about 5 million trades, give or take, under what the average is right now. That's only going to continue to go down. And when you have volume continue to go down, it's not hard for a market to float up, especially during the holidays, okay? But we can also look at a weekly view here. And give me a moment to get this chart set here. I just want to move these marks out of the way right quick. Now, of course, ignore the weekly expected move. That's only for this week. But if we go back to December, which was the last trading day of December here. Let me open this up a little. Okay. All right. So the last trading week of 2021, the SPY was up. What is that? 1%. The SPY was up 1% in the last trading week of 2021. The week prior to that the SPY was up 2.3%. So you can see this is the last week of big moves. We were up 1.5% on the SPY today. That's a big move. Next week, we shouldn't see that, okay? 1% the last week of 2021. Now let's go look at December. Let's look at December of 2020. Oh, there we are. Okay, right here. Oh, I moved it. December, January. All right, in 2020, the SPY was up 1.3% the last trading week. 1.3% the SPY was up in the last trading week of December. Let's look at 2019. That's all before the pandemic and really all before the retail traders. And in 2019, well, that's only one day. Okay. Here, this is taking in the last week of, in 2019, there was there was 2 trading days of December, and then 3 of the days were, so one was probably a holiday, so there's probably only 1 trading day. And the market for that entire week, which included 1 trading day in December, was down 0.1%. But the last full week of December was up 0.6% in 2019. And just real quick, going to 2018, I mean, we could take those 3, average them together, and we're looking at somewhere between 0.5% and 1% move during the last week of December. All right, let me just throw 2018 on here, because 2018, there was some stuff going on. That's where we had this, where December was this. October, November, and December, boom, just down right there in 2018. But the last trading week of December, that was actually the bottom of the market, and the market then rallied. It was up 3% the last trading week of December, but the October, November, and majority of December collapse in 2018 is what helped spark that 3% move. So yes, to answer your question, yes, typically the last week is a decent week, except it's not a big week, right? It's not a monster moving week. That is, of course, unless we have just come out of some spectacular fall and we're rebounding. I mean, look at this. Look at this. On a weekly time frame right here, we have this fall, and then look at the candle that's made so far this week. I gotta show you this. The candlesticks over here. Look, when we have 3 days falling, and then we have the good old-fashioned hammer candle, what does that lead to? It leads to a reversal and a rally. And look at that. We have a hammer candle for this week right now, which should lead then to 3 weeks of rallying, or at least 3 days of rallying. This is on the weekly time frame where this is coming in at, so technically it should lead to 3 green weeks. Technically, doesn't mean it has to, but it is positive. If this week does finish off with this hammer candle, then it's very positive for the next couple weeks, and next week specifically, it is very positive for. So hopefully that answers your question there. And that's why I keep using the phrase that I believe that we're just going to start floating up for the rest of the year. Okay. All right. Last question, or I guess you have one more question coming up. Yeah. All right. Would you harvest losses at the, okay, that's a real good question. Would you harvest losses at the bottom? I have a few positions that are near all-time lows. First thing that I would say is there's a lot of factors that go into determining whether to take the losses. The majority of them, I have no idea. I don't know what your situation is. Lucid, yeah. EVs got overly pumped during the era of retail investors. LCID. I mean, I used to talk about electric vehicles quite frequently because they were where all the big moves were happening. I mean, yeah, Lucid is definitely, I can't believe it's a $7 stock right this second. I mean, I can, but I can't at the same time. Weekly view, just a reminder that this is a weekly view, not a daily view. Man, this has come from all over. There are benefits to taking your losses because they obviously offset your gains when you are paying your taxes on your gains that you have for the year. That's the biggest benefit right there. Number one, offsetting your gains. Now, don't hold me to this, but from my understanding and running through it, you can, if you have losses, carry them forward for a year where you have a lot of gains that need to be offset. Because in a down year like this, typically the investor who is taking advantage of tax loss harvesting are taking their losses and then they're holding it for a year where they have a lot of gains so that they can offset those better years. So Lucid, this is not a company that is going to turn around anytime soon stock-wise. This stock will go lower. Companies that are profitless, do not make a profit, they're going to struggle to even exist next year. Lucid being one of them. Now, I know Lucid does have big backing from some big players, Saudi Arabia. So they've got a lot of money that they can burn through, but money isn't infinite. It's not there forever. At some point, it runs out, even for the richest person. So, depending on your situation, yes, it can be beneficial. But that's as far as I can. It's not even advice, so don't even take it as advice. Just my experience, it is beneficial. It can work in your favor. And the main purpose of it is to offset your gains when paying taxes on those gains. And carrying them forward is a possibility. So yeah. That's why I bought. LOL, that's why I bought them. Yeah. They were definitely pumped. But once retail you know, understood that the markets don't always go up, that's when a lot of retail investors bailed on the market and just haven't returned. And will they? Maybe once we return to a bull market, maybe retail investors will return. I don't know how likely that outcome is, but I'm sure they will. To me, that just makes sense. But then again, I didn't leave the market when it turned bearish or when it was bearish in 2018. You change your strategies because you can still make money in a down market. It's a little harder. You have to be more tactical and you have to do more research, but it's still doable. So, yeah. Okay. All right. Well, I'm going to wrap this live stream up, and I'll be back tomorrow, of course, after the market is closed. Just click that like button, share the video with a friend. That helps out tremendously. And yes, I will see you tomorrow. I already said that, didn't I? Yes, I did. I always get, this is the worst part of the video because I never know how to say, okay, goodbye. I just kind of let it go too far. All right, good. Okay, well then I'll wrap it up for today. I'll be back here tomorrow, and we'll talk about what happened, why it happened, and what to expect going forward. We'll probably do that. Okay, good. Make sure to talk to your accountant about tax loss harvesting because they know the rules much better than I do. You know, when I was young, filing your taxes on your own, it was simple, piece of cake. But once you start to invest here, invest there, have a family, then it becomes a little more complicated. So you need people who know the law so you can use the law to your advantage. Okay, well, I'll wrap it up here. Thank you again for being here with me. I greatly do appreciate it, and I will see you in the next video. Take care.